value of Regent Street, we were finding that we had an increasing number of our eggs in one basket. But this reduction in our exposure to central London allows us both to release capital for investment elsewhere across the Crown Estate, to rebalance the portfolio for sustainable outperformance in the medium to long term, and it also provides valuable working capital for the business, much of which will, in fact, be reinvested in the West End. So the receipts from our central London disposals and from the deal with the Norwegians are therefore being deployed essentially in three key areas. First of all, a proportion will go into the commercial property markets outside central London, most likely into prime dominant retail assets. And over the last year or so, you may have seen in the press, we've acquired a number of retail parks and also 2 city centre schemes in strong regional centres, namely Oxford and Exeter, where we believe the economics of supply and demand will sustain performance in the medium to long term. Second, we've committed to invest, and this is a departure for us, over 120 million over the next few years in our marine portfolio, where our exposure to an alternative area of activity gives us another opportunity to obtain a competitive advantage. In particular, we're going to be directing this capital towards the alternative renewable energy opportunities I mentioned earlier. St James's Gateway on Piccadilly, and our commitment to commence our next major development on Regent Street later this year, for which we've recently received planning consent. In support of this approach, our use of partnerships is also becoming an increasingly important feature of our approach to investment, enabling us to make our equity go further when developing and actively managing our portfolio. So this includes joint ventures with Land Securities in Exeter and Oxford, and within the West End, the recent deal with the Norwegians, and also another one with an organisation called HOOP, a Canadian pension fund, on our St James's Gateway development, which is just beginning to get underway. In order to support and develop our investment strategy and deliver its successful implementation, we need to ensure that we are able to employ the right skills. And in recent years, we've strengthened considerably our in-house team, recruiting investment analysts, more asset managers, and as I mentioned earlier, engineers and project managers with a background in the energy industries, as well as other specialists such as scientists and ecologists. And taken together, this is how we're seeking to drive sustainable performance from the Crown Estate in the medium to long term against the background of tough economic and market conditions. Well, of course, the proof of the pudding is always going to be in the eating. So how have we done? Well, our net revenue surplus, or profit, which we hand over to the Treasury, has increased steadily over the last 10 years, from £148 million in 2001 to £226.5 million in 2009, so that it now stands at about 6 times the cost of the state support for the monarchy, which is a little under 40 million. So the original deal struck by George III with the government of the day, which was certainly to his advantage at the time, has now turned out to be a very good deal indeed for the nation's finances. However, in 2010, our profit for the first time fell back to £210 million, reflecting not so much, interestingly perhaps, the state of the property market, but perhaps surprisingly the peculiar circumstances of the Crown Estate. Being unable to borrow, we generate our capital for investment and development essentially through trading activities. That means that during the course of the year, we hold quite large capital funds on deposit, almost under the mattress, if you like, on which, of course, we earn interest when there is interest to be earned. With interest rates at 1% or less for nearly 2 years now, our interest earnings have fallen dramatically. And the fall in our profit last year, which was over £16 million, was almost entirely due to low interest rates. But for that, our profit would have been in line with the year before, which was, I think, a pretty creditable result in the circumstances. And in the current year, notwithstanding the continued low level of interest rates, we are anticipating a recovery in our profits when we report our results next July. Put it all another way, over the last 10 years, we have delivered in total almost £2 billion to the Exchequer for the benefit of the public finances. Our capital value, which of course is ungeared, has risen by over 50% since 2001, from about £4 billion to about £6.5 billion today. Of course, for property industry aficionados, the real comparator is IPD, and in particular, total return. Over the last 10 years, we've consistently outperformed both the capital and income components of the IPD index. And in 7 of the last 10 years, we've outperformed the IPD total return quarterly index. But, and I can't stress this often enough, we are very far from complacent. Despite the innate advantages we enjoy, we cannot afford to rest on our laurels. Yes, we have the ability to take the long-term view. Yes, we enjoy the strengths of a very diverse portfolio. Yes, we have the benefit of some top-quality assets, but that is not enough. While we have our origins in a historic landed estate, we cannot sit back and coast along relying on our inheritance. We've set our sights much higher than that. We see ourselves as proactive players in the commercial marketplace and open for business, focused on delivering sustainable performance while not losing sight of our origins and values. And not losing sight of our origins and values is critical. We need to be clear about what we stand for and what we represent. At the same time, it's vital that we turn these qualities and values to our commercial advantage while making sure that we remain true to them. Only in that way can a long-term business hope to survive and prosper in turbulent times. When I was first appointed to this job almost 10 years ago, my then chairman, a chap called Sir Dennis Henderson, said to me, "Any business that stands still will go backwards." And I think those words are as true today as they were then, and they're as true for the Crown Estate as they are for any other business. I'd just like to round off with a very short film which seeks to capture the many aspects of the unique business which is the Crown Estate today. Thank you very much.